Welcome to a new update, and today we're going to discuss everything that's been happening yesterday with Powell. And the actual event that took place was not due to Powell, but after Powell, as banks have been falling apart massively since then. We've had First Republic Bank who fell apart in the last few days, actually in the past weekend. And there were a few other names that were on the brink of a bank failure, and PacWest and Western Alliance are the two second ones after that. So Powell did his speech yesterday in which he mentioned that the banking system is sound and resilient, but as a result we've seen that banks are actually starting to fall apart and that the US economy and the banking system are really in trouble at this point. So that's what we're going to discuss in this update. We're going to look at the speech from Powell, we're going to look at the price action of Bitcoin since, and we're going to look at the results of what has been happening afterwards and what we can expect in the coming period. Before we can do that, make sure to hit the like button, subscribe to this YouTube channel. Also check out my public group where you can find more information on the markets, where you can find a trade ID every 2 weeks, and where you can have a lovely community to chat around. Also make sure to whitelist yourself for the course where you are able to win one. It's a course, 7 hours all around view of the crypto markets in the ecosystem. Everything will be in there. It gives you the ideal kickstart on your crypto journey. So what we're looking at with the entire case right now is that first of all, what you can see on the chart or on the screen is the collapse of the banks after Powell's speech took place. So this is the after hours action. This is traded after the stock markets are closed. So it's futures, and they show as a result of 5 regional banks which have been collapsing after Powell has been presenting his speech. Powell has been giving a speech in which he mentioned that the banking system is sound and resilient, and he continues to hike with 25 bips. That is not really what banks need to hear at this point, especially if you are already in trouble like PacWest and like Western Alliance. So what did PacWest do? Well, we have seen this drop of 60% after markets, and I'll just show you in a little bit what the value is of PacWest, and it has been going in the past month. Western Alliance is going down 28%, and more start to follow here. Also, as a result, PacWest announced that they will be going for a sale. So I think it's just a matter of time before PacWest starts to fall too, and then we have already got a banking crisis that is larger than the one in 2008. What did happen with the price action of Bitcoin? Bitcoin is currently into a period of sideways action. The good part, and what we can see on the chart, we can see that the Powell speech didn't really move markets that much. So the actual move takes place afterwards. If you have been following my live stream yesterday, I said that I was expecting us to have at least a corrective move going into his speech, and then we can start running after, which we have been seeing here. I wasn't assuming that that was based on the fact that banks were falling apart, but hey, here we go. What do we see? Well, the good part is that there is not really that much of a result going into the event anymore, so the events are not moving markets that much, but the outcome are moving the markets at this point in a way that the banking system is having its issues, and then Bitcoin started to rally. So the speech took place, not really much taking place, and then banks start to fall apart and the market start to rally up, which is very similar to the action of gold, which has seen a spike, might even have been making a new all-time high. Yes, we did. Gold has been making a new one, and now it's just consolidating, through which the Bitcoin starts to move alongside gold at this point. And that is a great sign, which you clearly want to see continuation on that in the coming period, in which I have already been mentioning for a long time that you preferably want to be into gold, you want to be into commodities overall, and you want to be into crypto. So what did actually happen? What we just have been seeing is we've had the FOMC statement, and the FOMC statement is the statement from the Fed in which they clarify what their view is on the markets, what they want to do against inflation, what they are going to do against the federal against the unemployment, if that is going to accelerate. And as an outcome, they have been hiking by 25 pips. So the federal funds rate has been increasing by 25 pips, which was expected by the markets. The markets are also pricing in more rate hikes at this point. And as a result, you would assume that the dollar is going to go up and that the Bitcoin and risk on is going to drop down from that. That didn't really take place. We have been seeing the dollar falling apart, and we've seen Bitcoin going up, in which only thing that started to fall apart is US stock markets, which is normal because stocks in itself have an impact by what the Fed is doing. Commodities come out of that in a positive way. So gold has been going up, silver has been going up, Bitcoin has been going up. The speech itself, I've just mentioned it. Powell has been stating that the banking system is sound and resilient and that he's not really expecting more banks to fall apart. As a result, we've actually been seeing more banks that are falling apart and that the US economy is on a critical level. So, what is the market saying at this point? If we go back into the chart, you have to look at what the markets are pricing in for the yields at this point. As we can see here, the 2-year yield has been seeing this rally that was prior to the Fed meeting, in which there was a clear view that we could be getting more rate hikes and that it's going to give us a soft landing. That's why we saw this rally on the 2-year yield. But you should be aware of the fact that we've got this bearish divergence and we've got a clear case of a bear market relief rally for the yield. We started to fall, and now we've even started to fall more after First Republic Bank collapsed and the news from yesterday. So what I'm expecting to happen here is that the yields start to fall apart as Yellen and Powell really need to come out fast when it comes to the regional banking system. If there are more regional banks that start to fall apart, it is going to be systemic, and that is going to give some serious questions on the US economy. Now, that took place yesterday, and then we've got the markets and they are pricing in what the Fed are most likely going to do. What we see here is the projections for the coming events, right? So what we see is that the Fed just raised rates for the last time in this rate hiking cycle. That's what the markets are saying. And the next move should be a cut and could come as soon as September. So what you see here on the chart is in June they still expect one more hike, but the expectations have been decreased. So we have been seeing a case of expectation of an hike increase of 30%, but this was way higher prior to the event of yesterday. So there's still a chance that we're going to have a rate hike in June and that we're going to start cutting rates in September. I've mentioned this before. If we're going to have a pause, which is most likely going to take place right now, then until he starts to cut, it is going to be a great signal for Bitcoin and for risk on. If he starts to cut based on the fact that the banking system starts to fall apart, we could continue rallying, but most likely if a cut takes place, the markets are starting to drop, the US indices, and then we are actually looking to get a liquidity crash, which means that also Bitcoin is getting sold off, and then when the bottom is in, that's when we start to shoot up quite fastly. So this is looking terrible, but the markets are not expecting more rate hikes, and they have been expecting more, but now they have been swapping towards lower rate hikes, through which the markets are usually pricing that in, which means that we are looking at a case of gold going up, Bitcoin going up, stocks probably consolidating until there is a clear view of a pause, and if there is a pause, then we can have a continuation. So the markets are not expecting a few more hikes. They're expecting one more hike and then they are done. Additionally, the yields have been getting into a stage of the highest, and this is the 3 months, as you can see here. The 3 months are the highest since 2001. This is 2018, this is 2008, but this is the highest level. If you're looking at the stage of the US 3 months government bonds, we are literally today hitting the highest point, and today might be the end of it. So what you see is the 10-year yields. The 10-year yields have been falling lower already, and are currently into a stage of downwards drops. So this has already been falling since November. If we're looking at the 2-year yields, these have peaked in February and start to trend lower. So the expectations are that over time the yield is going to be lower. At this point, the effective rate or the rate is at 5.25. But we're getting into a stage where we're going towards 3.8 for the 2-year already. So the expectations are from the market that the Fed needs to adjust or pivot really soon. The 3-month yields are currently at 5.32 and have been breaking up. So that is pretty much valued at a premium, which means that right now the federal funds rate is 5.25, and the expectations are still that there's one more rate hike. But once this starts to drop, which might be getting quite soon there, we're going to have a hard drop, a fast drop, like these turnarounds here, and it's going to give some relief to the markets overall, but that's going to be the signal for you. So once this starts to turn, drops beneath 5.1, I think we are getting into a stage of a very harsh drop, and then we can have continuation on the markets. We've seen this drop here from 7th of March until the 20th of March. Why was that? Well, we can see it here as well. The 7th of March was the crash of the banking crisis, and then Bitcoin started to rally quite substantially. So if the yields start to drop, especially in 3 months, it's going to give Bitcoin another ingredient to continue moving to the upside. Then PacWest. PacWest is said to weigh strategic options, including a sale, down 23%. This was during the post after markets. It is now down 60%, and I think today, when I'm shooting this video or when you're watching this, PacWest is halted on the stock market, including Western Alliance and a few other banks, and probably PacWest is going to be sold off to a big bank again during the weekend or to FDIC, and then the shareholders are again the ones that are losing here. What is happening? Right now we are having the highest interest rates. We've got a credit card debt set to cross 1 trillion for the first time. Multiple regional banks on the brink of collapse after a few have been collapsing. We've got the regulators believing that the system is still strong and they continue to rate hike. And we've got 1 month away from the US default, which is on the edge as well. We've had the US debt ceiling coming in, and that if that is not going to be raised, we're going to have a default that's going to take place in a month from now. What do we have more? We've also got crude oil, which is currently consolidating but making pretty strange wicks. I can show it to you here on the chart. Crude oil is just collapsing south again. That is usually not a sign of strength, and then something is off, which we have also been experiencing in March. That was during the previous banking crisis, and now we're getting into the second one already. Now, PacWest says our cash and available liquidity remains solid and exceeded our insured deposits. It's a crucial statement from PacWest because once the value of assets dive below the value of uninsured deposits, the incentive to get deposits out increases considerably. That's probably what we're going to get today. The worrying thing is this means that investors will sell off any regional bank without paying attention to underlying fundamentals. This means that Western Alliance or all the other ones that I've shown here, Comerica, KeyCorp, those are all going to be sold off as well. It's not about the single bank anymore. It's just a panic all across the markets from everyone, through which people swapping their assets or want to get their assets out of a bank. Where do they go to? They go to the big banks, or they go to commodities, or they go to crypto. That's what's going to happen. So what do we need? We need the Federal Reserve and Yellen to step in quite soon. Now, what do we have here? We've got the DXY that is currently, during this update, bouncing up slightly, but it's overall trending down. Today it's ECB day, and I assume that if the ECB continues to rate hike, probably the dollar is going to fall apart south, in which we continue the downward trend, and I'm assuming that we're still going to hit 88. The yields are currently trending down, which means that we're currently continuing this downwards fall and will most likely continue falling when more banks start to collapse. Gold just made a new high and is just consolidating. I think we are not on the edge of a correction there. I think we are on the edge of continuation, but it just needs to stabilize. Liquidity has been taking above these highs, which means that we are consolidating before we continue to move on gold. Now, Bitcoin is getting into a stage where it's becoming quite interesting. Of course, if there is going to be multiple banks falling apart again, we could be getting a copy-paste of the chart we have here. That means we are somewhere here. If Bitcoin starts to fall apart, we're probably going to get this and then shoot up again. However, it is a super standard approach in which it's very comparable to the previous one, and usually those things don't happen. But once again, if we get into these regions of 23 to 25k, it is your time to start buying the asset. But on the other hand, given the response that we have right now with Bitcoin, cracking the resistance zone here is going to induce continuation. And if we look at gold, gold is breaking all-time highs. And I think right now, with the banking system that starts to fall apart, it is the time for Bitcoin to start moving upwards. And it's the time to start breaking to the upside. So I think I'm still favoring Bitcoin at this point, especially if we look at the lower time frames. You clearly want to see 28.4 consist of support, breaking through this resistance area, just like I've shown in the other chart, breaking through 29k, which is slightly higher. I don't know why my line has moved, but it's here. Breaking through it, flipping it, and that's a continuation trigger towards new highs. 28.4 could still be a case here. When are altcoins going to step up? I mentioned this yesterday, but altcoins are currently still dropping down, which means we're still eager for a support on the altcoins. It's not the best time for altcoins, but the worst time is already behind us, which means that investing into altcoins is getting there. But what we're looking at is a case of a bottoming procedure, and we're getting close towards one, which means that Bitcoin needs to break 30k and ETH against Bitcoin needs to find a bottom. And when we do, that is going to be the trigger for altcoins to start shooting off. So when Ether is going to flip 0.071, that's a trigger for continuation. I hope you have been enjoying this update. My hay fever is killing me, so I'll be taking a relaxing day. Make sure to hit the subscribe button and I'll be back on Saturday with the altcoin update. Ciao.